Great day, class. I hope you are learning well in our subject income taxation. Today, we will discuss about income tax on individuals. Allow me to share my screen. All right, so can everyone see my screen? Okay. So we are now on chapter 4 on income taxation, and we will discuss about income tax on individuals. Now, at the end of this lesson, you must be able to identify and classify individual taxpayers, identify income tax rates for individuals, and compute the individual income tax. But before that, let us define what is taxpayer is. Taxpayer means any person subject to tax imposed by Title 2 of the National Internal Revenue Code in Section 22N. Now, we have 5 classifications of taxpayers. So we have individual taxpayer, corporate taxpayers, estate taxpayer, trust, taxable trust, and taxable partnerships. So for individual taxpayers, refers to natural persons with income derived within the territorial jurisdiction or of a taxing authority. And it may be either a citizen or aliens. For corporations, these are entities that is separate and distinct from its owners. For estates, estates refers to the mass of properties left by a deceased person. A taxable estate entity is one under administration or judicial settlement. So, pag isang tao namatay siya, hindi yung personality niya will not fully be extinguished, but will continue for purposes of dividing the properties and transferring it to the other person. And for purposes of taxation as well. Diba? So, kaya meron tayong mga estates. Now, we also have taxable trusts. Trust refers to a right to the property, whether real or personal property, held by one person for the benefit of another. So pag trust naman, it is an entity that is formed where a trustor entrusted his property, whether real or personal, to a trustee for his enjoyment or possession, but for the benefit of a beneficiary. So there are 3 parties in the trustees. Okay? So for example, ako, ipapaubaya ko yung property ko kay sa hasyendero ko, di ba? Entrust ko sa kanya yon for 15 years until and unless mag-reach ng 18 years old yung beneficiary. For example, yung anak ko. So, ganon. And for partnerships formed by persons for the sole purpose of exercising a common profession. So, but for now, we will focus on the individual taxpayers and corporate taxpayers. And for this topic, we will discuss about individual taxpayers. So who are those? Individual taxpayers may refer to a citizen or an alien. A citizen is defined under Section 1, Article 4 of the Philippine Constitution. Okay? As a Filipino citizen who is number 1, a citizen of the Philippines at the time of the adoption of the 1987 Constitution. Okay? Which was on February 2, 1997. Kapag ikaw Pilipino ka, pinanganak ka ng February 2, 1987 onwards, automatic, Pinoy ka. Next, those who are born with father and or mother as Filipino citizens. So even if hindi ka fully Filipino, your mother, for example, is a Filipina and your father is an Australian, you are still considered as Filipino and vice versa. Okay? As long as isa sa nanay at tatay mo ay Filipino citizen. Third, those born before January 17, 1973 a Filipino mother who elects Philippine citizenship upon reaching the age of majority. And last, and those who has acquired Philippine citizenship after birth in accordance with the Philippine law. So there are some who are not born Filipino citizens, but maybe in the process, according to the Philippine law, may be naturalized. Okay, and that is what citizen means. How about alien? Alien refers to a foreign-born person who is not qualified to acquire Philippine citizenship by birth or after birth. So yun yung pinagkaiba nila. Siyempre kapag alien, hindi siya pinanganak talaga, hindi siya na-naturalized, hindi siya pinanganak na Pilipino, or wala sa magulang niya ay Filipino citizen. Now, for citizen, it may be further subdivided into two. You have RC and NRC, or the resident citizen and non-resident citizen. And for the alien, we have resident alien and non-resident alien. Okay, and for non-resident alien, this is further subdivided into those non-resident alien engage in trade or business within the Philippines, and non-resident alien not engaged in trade or business within the Philippines. Those are the NRATV or NETV, and we will discuss this in the next slides. For resident citizen, who are the resident citizens? Those are those citizens of the Philippines who are residing citizen, who are residing in the Philippines. So the question is, are you a Filipino? Are you a resident citizen? So it depends whether you are, number one, a resident of the Philippines and you are residing in the Philippines. So kapag di ka naman kapag ikaw naman ay Filipino citizen and you are not residing in the Philippines, you may be called as the non-resident citizen or NRC. So what's the difference, sir? Bakit we have to classify this? Because for resident citizen, as we have discussed in our previous lesson, are being taxed from sources, or their income are being taxed from both sources within and without, meaning worldwide. Ita-tax sila. Pero kapag non-resident citizen na siya, tag as non-resident citizen, only those income which is sourced from within the Philippines is taxable. So let's discuss non-resident citizen. Those citizens of the Philippines who are physically present abroad for a period covering an entire taxable year. Okay? So for example, for the entire taxable year of 2018, you are presently abroad, you may be considered as a non-resident citizen. So he's a citizen of the Philippines who, so you may want to use my mnemonics, well, number one, who works and derives income from abroad and whose employment thereat requires him to be physically present abroad most of the time during the taxable year. So if you are working abroad and for most of the time of the year, of the taxable year, you are required to be there, then you may be considered as a non-resident citizen. Most of the time, the word most of the time here means at least 183 days. Why? Because 300, we have 365 days divided by 2 is 183, 182.5. So 183 days. So that's the most of the time during a taxable year. How about OCW? Who are the OCW? Overseas contract worker. So these are individual who is physically present abroad most of the time during the taxable year and taxable only on income derived from sources within the Philippines. So this is an example of a non-resident citizen, an OCW. So to be considered an OCW, they must be duly registered as such with the POEA and must have a valid working contract to work abroad. So, ibig sabihin nun, kapag ikaw ay TNT, alam niyo yung TNT? TNT Pinoys are therefore not considered as OCW but a resident citizen. TNT means yung mga tago ng tago, di ba? So, they don't have valid or valid contract to work abroad. So they just merely went there and tried their luck, di ba? So may mga ganyan tayong cases. And in that case, they will be considered not as a non-resident citizen, but a resident citizen. Now, number two, those who establishes to the satisfaction of the BIR commissioner the fact of his physical presence abroad with a definite intention to reside therein. So, number two requirement, you must be able to establish to the satisfaction of the BIR commissioner of your physical presence abroad and your intention to reside therein. So even if you're not working abroad and um, say for example, you want to apply, diba, for their visa and you want to reside there permanently. So you may be tagged now as a non-resident citizen. Okay? Next, leaves. Those who leave the Philippines during the taxable year to reside abroad, either as an immigrant or for employment on a permanent basis. So, ba, basta umalis ka sa bansa during a taxable year para manirahan abroad, either gusto mo na talaga maging permanenteng immigrant doon or for employment, then you may now be considered a non-resident citizen. And last, has been previously considered as a non-resident citizen and who arrives in the Philippines at any time during the taxable year to reside there at permanently. So for you were previously you was tagged as a non-resident citizen and you went back to the Philippines during a taxable year. So in that case, you are still considered a non-resident citizen, but for the taxable year in which he arrives in the Philippines with respect to the income derived from sources abroad until the date of his arrival. So, di ba, sabi ko kanina, if you are a resident citizen, you are taxed from all your income worldwide within and without the Philippines. Pero kapag non-resident citizen ka, only those income mo within the Philippines, sourced from within the Philippines are taxable. So if you were previously tagged as a non-resident citizen and umuwi ka sa Pilipinas, for example, to the year 2019, so let's say mga June 2019, hence, for June 2019, you are still considered a non-resident citizen for purposes of um, filing your tax returns or payment of your tax, okay, with respect to your income derived from sources abroad. Okay, now let's have an example. Zorro is a Filipino immigrant living in the United States for more than 10 years. Okay? He is retired and he came back to the Philippines as a balikbayan. Okay, so every time he comes to the Philippines, he stays here for about a month. Okay, he regularly receives a pension from his former employer in the United States amounting to $1,000 a month. So while in Philippines with his pension pay from his former employer, he purchased 3 condominium units in Makati, which he is renting out for 15,000 a month each. Okay, so let's digest the problem. But before that, let's read the question first. Number one question, does the 1,000 US dollar pension becomes taxable because is now residing in the Philippines? And second question, will Zorro be liable to pay income tax on the 45,000 peso monthly income? So let's explain and analyze. So Zorro is a Filipino immigrant living in the United States for more than 10 years. So non-resident citizen, right? More, and he retired and went back to the Philippines as a balikbayan. So after 10 years, bumalik sa Pilipinas. And syempre, during the 10-year period ng kanyang pag-immigrant, mabalik-balik rin naman siya sa Pilipinas for about a month. Okay? And now, he's now receiving regular pension from his employer abroad And he's been receiving $1,000 a month habang nandito na siya Pilipinas, di ba? So while in the Philippines with his pension pay from his employer, he purchased 3 condominiums. So, syempre, nakaipon siya. Bumili siya ng 3 condominium. Ngayon na pinaparenta niya for about 15,000 a month. Meaning, 15,000 times 3, may income siya na 45,000. The first question is, yung bang $1,000 na pension na kanyang nare-receive is taxable dito sa Pilipinas? What do you think? The answer is no, because Soro is still considered a non-resident Filipino citizen who is subject to tax only on income derived from Philippine sources. So, his pension from US is an income from without being in the nature of compensation for past services rendered outside the Philippines. So, accordingly, the pension is not subject to Philippine income tax. So, si Zorro, even if bumalik siya sa Pilipinas at nagtagal lang siya for about a month. So yung na-receive niya ng 1,000 pesos is not taxable in the Philippines because he is a non-resident citizen. Okay? And yung 1,000 pesos, $1,000 na yon is an income that is sourced from without the Philippines or outside the Philippines. So for the second question, dun sa UPA, diba? Will Zorro be liable to pay income tax on the 45,000 monthly income, rent income? So kanina, diba? So may 3 condominium si Zorro sa Pilipinas. Pinaparentahan niya ng 15,000 a month. So meron siyang 45,000 monthly income. Ngayon, taxable ba yon? Kahit non-resident citizen si Zorro? The answer is yes, because the rental income from property located in the Philippines is considered as income derived from within. Z or Zorro, a non-resident citizen, is taxable on income derived from sources within the Philippines. So, even if a non-resident citizen, as long as may income ka from within the Philippines, then you are taxable. Did you get it? Okay. So, next, we have resident alien. Tapos na tayo sa citizen. We have resident citizen and non-resident citizen. For resident alien naman, those individual who is not a citizen of the Philippines but a resident thereof. So a resident citizen is taxable on income derived from sources within pa rin. Okay, so kaya siya ng non-resident citizen, ang resident alien, taxable siya sa kanyang income from within, source within the Philippines. So only one who comes to the Philippines for a definite purpose, which in its nature would require an extended stay and makes his home temporary in the country becomes a resident alien. So kapag ang isang kano pumunta sa Pilipinas, 'di ba? And yung stay niya rito is an extended stay, meaning more than a year, 'di ba? Then he is considered as a resident citizen. So length of stay is indicative of his intention. So an alien who shall have stayed in the Philippines for more than 1 year by the end of the calendar year is a resident citizen. And a resident citizen is an alien who considers, a resident alien, one who considers Philippines as his domicile. So meron dito ang dami, 'di ba? Mga foreigners who are residing and living in the Philippines for more than a year. Then they are considered as resident alien, and they can be taxed from their income from sources within the Philippines. How about non-resident aliens? So, kung ang resident alien, sila yung mga hindi Pinoy, di ba? But they are residing here in the Philippines for more than a year. Ang non-resident alien naman are those citizens or those individuals who is not a citizen of the Philippines and not residing in the Philippines, but they are doing business in the Philippines. But doing business means or includes exercise of a profession or performance of personal services. Diba? And they are taxable only on income derived from sources within the Philippines. So meron tayong non-resident alien na engaged in trade or business. Sabi rito, a non-resident alien who shall come to the Philippines and stay for an aggregate period of more than 180 days during any calendar year shall be deemed a non-resident alien engaged in trade or business. So for example, in the year 2019, si Mr. A went to the Philippines for the month of January, February, March, then April, then May, June, July, August. He went back to his foreign country. Then then September, October, November, December, he went back to Philippines again. So basically naka 8 months or 8 to 9 months siya sa Pilipinas. Then that foreigner is now considered a non-resident alien engaged in trade or business in the Philippines. Now, an individual who is neither, so in general, his income, sorry, um, let's now proceed to the non-resident alien not engaged in trade or business. Kanina, a non-resident alien engaged in trade or business, those are aliens who resides in the Philippines for an aggregate period of 180 days. So kapag di siya lamampas doon, considered siya as not engaged in trade or business. Okay, did you get it? So an individual who is neither a citizen or resident of the Philippines and not doing business in the Philippines. So in general, his income is taxable at 25% final tax based on gross or entire income. However, a non-resident not engaged in trade or business is taxed at a special rate of 15% if employed by regional or area headquarters or multinational corporations, offshore banking units established in the Philippines, and petroleum service contractors or subcontractors. Now, we have an example. Si Pacific Inc. is engaged in overseas shipping. So it time chartered one of its ships to a Japanese company on a 5-year term. So the charter was consummated through the efforts of Kaminomoto. Si Kaminomoto is a Tokyo-based broker. Now, the negotiation took place in Tokyo, Japan. The agreement calls for Pacific Inc. to pay Kaminomoto 50,000 US dollars. So the question here is, should Pacific Inc. withhold the tax before sending the compensation to Kaminomoto and pay it to the Philippine government or the BIR? The answer is no. The compensation of Kaminomoto is not subject to withholding tax. So compensation for labor or personal service performed outside the Philippines are considered as income from sources without. Tandaan nyo? So outside sa Tokyo nagkaroon ng negotiation di ba? So that is an income without the Philippines. So since Kaminomoto is a non-resident alien not engaged in trade or business in the Philippines or NRA, NETB, he is thus liable only to pay income tax if the compensation paid by Pacific is compensation income derived from sources within the Philippines. So Kaminomoto here is a non-resident alien not engaged in trade or business. Sorry for the typo, NRAETB. Now, we have a comparison chart. So we have divided it according to the source of income and the taxable income. So for resident citizen, non-resident citizen, resident alien, non-resident alien engaged in trader business, and non-resident alien not engaged in trader business, ang source of income nila lahat ay within, except for resident alien, ang kanyang source of income is within and without. Okay? So worldwide. Now, sa taxable income naman for everyone except non-resident alien not engaged in trader business, ang kanyang taxable income is gross, yung final tax na lang niya. Whereas yung iba, yung gross compensation nila, yung mga net business income less personal deductions nila. So the taxable income of citizens, resident aliens, and non-resident alien engaged in trader business is defined as gross compensation and net business income less personal allowance. Taxable income of non-resident alien not engaged in trader business is their gross income. So non-resident citizen and aliens are subject to income tax on Philippine source income only. Okay? So, and resident citizens are subject to Philippine income tax on worldwide income. Non-resident citizen and aliens subject to Philippine income tax on their Philippine source income only or sources from within, such as employment income and passive income. So we have a chart here according to train law, effective January 1, 2018 and effective January 1, 2023 onward. So this is you will see on the right side the tax rates from 0% to 35%, depending on your annual net income or taxable income. So if your net taxable income is not over 250,000 pesos, then your tax rate is zero, meaning you are exempt. But that is why in the quiz, if you're earning compensation income of not more than 215,000 in a year, then you are not liable to pay an income tax. Okay, and it goes higher. The rate goes higher depending on your net taxable income. So if just refer to this table for your reference. Okay? Basta kapag lumampas ka na ng 8 million yung max for the 35% excess table. We will not have a computation naman. Don't worry. The exam. Now, effective January 1, 2018, for self-employed, this chart is for compensation income earners. Purely ha. The next one for self-employed and professionals. So yung mga professionals na nagpa-practice on their own or self-employed individuals, tinatak sila if their income does not exceed 3 million, yung mga YouTuber, di ba? If their gross sales or receipts or yung mga small business owners, if their gross sales or gross receipts does not exceed 3 million, they have two options actually. So they may choose to apply yung regular Philippine income tax rates, yung 8 to 35%, 0 to 35% depending on their income, or they may apply 8%. They may apply 8% of gross sales or gross receipts in excess of 250,000 pesos. So yung 250,000 pesos less zero, di ba? So kapag lumampas ng 250,000 pesos, 8% lang nila automatic yun. However, kapag lumampas naman ng 3 million yung sales nila, dapat regular Philippine income tax rate na yung gagamitin. So this is in lieu of income and percentage tax. Yes. Yung 250,000 pesos. Now, for mixed income earners, sino yung mga mixed income earners? Sila yung mga sumasahod na, diba? By compensation income, and also they are practicing yung professional or they are involved in another business. Now, the type of income is compensation income and income from business or practice of profession. And the gross sales does not exceed 3 million. So same as with the self-employed and professionals, you may choose between the regular Philippine income tax rate or 8% of gross sales receipts, okay, in lieu of the income and percentage tax. And if your gross receipts or sales is above 3 million, then you have to apply the regular Philippine income tax rates. Okay, so actually that's all for and for our topic. We have some exercises here. So the question for exercise number 1, from what source of income are the following persons corporation taxable by the Philippine government? Number 1, for citizens of the Philippines residing therein, anong income ang tinatak sa kanila? Within or without? How about a non-resident citizen? How about an individual citizen of the Philippines who is working and deriving income abroad as an overseas contract worker? How about an alien individual, whether a resident or not of the Philippines? And how about a domestic corporation? So we will find out in another YouTube link. I will post it here. Okay. So for now, goodbye, class.